As the central banks, the most well-funded but well-informed traders on the planet, dump dollars and buy gold, dump treasuries and buy gold, who's buying all the treasuries? Oh, yeah, it's us. It's the public chasing yield, leaving the banks, making the banks more fragile. It's the hedge funds. It's the money markets, or the money managers, rather, that are trying to find yield after a decade plus of no yield. So they're buying the bonds as the rest of the world sells them. Now, it's a whole lot easier to reset the system if you're paying back yourself.
In its report, the WGC estimated that central bank demand added 10% or more to gold's performance in 2023, and noted that even if 2024 does not reach the same heights, above-trend buying should still offer an extra boost to gold prices. AndySchectman, the CEO of Miles Franklin, warns of central banks shifting from dollars and treasuries to gold due to Western suppression, while banks are buying the treasuries being sold. Banks face limited options and heavily invest in treasuries, with JPMorgan Chase reporting a $150 billion investment in a single quarter in 2021. While the CARES Act relieved consumers, it adversely affected banks' balance sheets as treasuries yielded less than potential loan interest rates. While he underscores gold and silver as wealth and credits Doug Casey for noting they are among the few assets not someone else's liability. According to a 2019 survey by the Gold IRA Guide, approximately 10.8% of U.S. citizens own gold, while 11.6% own silver. This equates to about 35 to 38 million people who have invested in these precious metals, and it is easy to see why. Regarding financial matters, Andy talks about Saudi Arabia's bond holdings and a shift towards gold investment. Saudi Arabia sold down its holdings of U.S. Treasuries in June to the lowest in more than 6 years. The kingdom held $108.1 billion of Treasury securities in June, down $3.2 billion from May, and below the $119.7 billion it held at the end of last year, according to data from the U.S. Treasury Department. Andy further mentions a global trend of central banks exchanging sovereign debt for gold, while the U.S. actively undermines the dollar's reserve status. In recent years, central banks rushed into gold due to declining trust in the dollar, triggered by the freezing of $300 billion of Russian reserves after the Ukrainian invasion. Brazil, Russia, India, China, and South Africa have bought almost 5,000 tons of gold for their official reserves in the last 15 years. China and Russia added more than 1,500 tons, while India added around 450 tons. Now, we present the clips of AndySchectman's insights from his recent interview. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
Precious metals are wealth. They're not an investment. They're money that has outlived 2 world wars, German hyperinflation, the Great Depression, every pandemic, everything horrible that's ever happened in this world or ever been thrown at metals. That's what it is. But there's even a bigger reason. And to me, it is what Doug Casey coined, the phrase that he coined that I borrow quite often. I like to give him credit for it. And that is that precious metals are 2 of the only assets, gold and silver rather, 2 of the only assets that are not simultaneously someone else's liability. The phrase counterparty risk is something that's going to take on a whole new level of icky. Well, we know that Saudi Arabia signed a military agreement with Russia. We know that Saudi Arabia joined the BRICS and the Shanghai Cooperation Organization, the largest regional military organization in the world. They're, in essence, standing behind 2 of the 3 largest nuclear arsenals on the planet. So they've got some safety there. And then the coalition of all these countries together gives that safety in numbers. But when you talk about the bonds, Saudi Arabia is at about a 7 or 8 year low in bond holdings. They're not rolling them over as they mature. They're buying gold with it, like the Chinese, who are at 17-year lows in treasury holding, forever, decade highs in gold accumulation. The central banks over the last year and a half have bought more gold than ever. In the 70-year history of central banks, roughly, they bought more gold since they started keeping records. And so the central banks are trading their debt, their U.S. debt, for gold. And if you go back throughout history, sovereign debt as an asset is a relatively new phenomenon in a historical context. And watching what's happened to the bond market, it's no surprise that these countries are selling debt, not rolling it over, and buying gold, which the BIS, the Bank of International Settlements, reclassified as what? the only other tier one reserve asset in 2019 next to US dollars. It's the foundation of what's coming next. And there is no coincidence that the world central banks are buying gold at such a copious rate using the Western suppression. And this is a big deal because think about this. As the central banks, the most well-funded but well-informed traders on the planet, dump dollars and buy gold, dump treasuries and buy gold, who's buying all the treasuries? Oh, yeah, it's us. It's the public chasing yield, leaving the banks, making the banks more fragile. It's the hedge funds. It's the money markets, or the money managers, rather, that are trying to find yield after a decade plus of no yield. So they're buying the bonds as the rest of the world sells them. Now, it's a whole lot easier to reset the system if you're paying back yourself. I don't know if we talked about this the last time we were on the show. We may have. But the two economic advisors that lead the United States government for economic policy, one is Jared Bernstein, whose whole thesis is loss of the world reserve standard. He has publicly advocated for years for the relinquishment of the dollar's reserve status as a privilege that we can no longer afford, that it creates trade imbalances and distortions. He's written articles that were picked up in the New York Post called Dethrone King Dollar. And when Trump slapped tariffs on China, he said, great, hopefully we lose the reserve status. This was picked up in the Washington Post. This is the lead economic advisor to the US government. So let's weaponize the dollar. Let's tell Saudi Arabia we're going green. We'll confiscate Russia's foreign reserves. We'll do the same thing to Iran, two of the BRICS members. And then we'll tell the linchpin of the dollar hegemony, hey, it's been great, guys, but we're going green, and sign an executive order to attest to that. So instead of embracing the exorbitant privilege of being the world reserve, we're doing everything we can to tell the world we don't want it anymore.
During the interview, AndySchectman described significant gold and silver accumulation by major investors, citing India and China as key examples. However, he stated recent market movements, noting exaggeration on the downside and emphasizing the significance of an anticipated gold breakout. Gold prices are forecasted to hit fresh highs and to remain above $2,000 levels in 2024, analysts said, citing geopolitical uncertainty, a likely weaker US dollar, and possible interest rate cuts. Andy predicts OPEC's shift from the petrodollar due to green initiatives, while anticipating increased east-west volatility. In 2023, a few changes suggest the petrodollar might not be as solid as once thought. Most notably, on March 29th, Saudi Arabia announced that they had agreed to become a dialogue partner with the Shanghai Cooperation Organization, the world's largest regional political and defense organization regarding geographic scope and population. Let's get back to the interview.
I don't know where to put your money. I try so hard to think, where would I put it? And in a world of imperfect choices, to me, I keep coming back to gold and silver as well, not to become wealthy, but because they are wealth. And when you see the biggest money in the world accumulating it the way that they are, where even in silver, India imported another 60 million ounces in October on top of 304 million ounces last year. China imported 10 million ounces in October. They're continuing to drain the exchanges of all of the big quantities. They're using the suppression of price to run cover for their acquisition, to reposition. If the biggest, most well-informed money in the world is doing this, then the price means nothing. It is the greatest tool of misdirection. And so when you can remove counterparty risk in times of great uncertainty and look at what the biggest money and realize that it's been money and wealth for 5,000 years, it's not an investment, it's wealth. I come back to it as well. Gold and silver are, to me, aside from being wealth in times of uncertainty, aside from the fact that the biggest money in the world is accumulating it, aside from the fact that it's the only other tier one reserve asset in the world, it is not simultaneously someone else's liability when you hold it in your own possession, where you can be your own bank, your own insurance company. And I think that's really a point that also has to be hammered home. Certainly to the downside, we've seen exaggeration. Now, you could argue that to the upside that we saw on Sunday is that breakout that us gold bulls have been expecting for a very long time. And what we saw Monday is the other shoe dropping, what we've been conditioned to understand for a very long time. And that to me is just emblematic of how big of of a deal this really is. It's a very high stakes game, and it's one where you could argue, at least I could, that this is a game of world. Oh, hello, Minnie. This is a game of world reserve status. What you saw is Asian buying of gold and the rest of the world accumulating gold, and the Western response to it. Now there is the conventional wisdom that, yeah, you have a lot of people. This is a triple top. You have a lot of people who at 2000 bought gold who were finally selling. They were capitulating. And we've seen some of that. And to a degree, some of that is true. That's natural market dynamics. But I also want to believe that the rest of the world, the majority of human population, sees what is unfolding. And this is a massive, massive shot across the bow, right along with Brazil now joining OPEC. You are seeing these countries choose sides and find strength in numbers, pushing back against the Western hegemony, the Western hypocrisy, and the Western system. And when we see OPEC make that final statement, because after all, we are going green. We did sign an executive order saying by 2050, we're 80% green. By 2030, 50%. We're moving away from the combustion engine. Why would they want to sell their oil for dollars where we've pretty much chosen inflation over austerity, and then recycle those dollars into bonds where the last 3 years really hasn't been so great for bondholders? So this is something that's getting very serious. And this volatility that we are seeing, in my mind, is less market dynamics and more East versus West, where East is accumulating and West is pushing back. And this is a game that I expect to see much more volatility and many more admissions, just like we saw from the United Arab Emirates. But heaven forbid, when it comes to all of OPEC making this decision, very, very quickly it becomes a religious experience in this country. So to me, Ron, this is the beginning of the end of the petrodollar and the beginning of some, as the Chinese curse says, very, very interesting times in this country leading up to the 2024 election and all of the things that go along with that.
Buying precious metals can help you secure a relatively stable investment for your portfolio that will retain its value for years. How do you perceive the role of gold and silver in the future due to ongoing economic uncertainties? Share your thoughts in the comments section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.